We're going to look into some concerning insights from Walmart CEO Bill Simon about the upcoming fall and winter season. He's raised alarm bells about the challenges consumers are facing and how it might impact their spending habits. Recent times has been the convergence of the several global issues that are collectively putting a squeeze on the wallets of American consumers. Among these issues are inflation, interest rates, and geopolitical tensions. Let's delve into the impact of these challenges on the average American. Inflation, for starters, has been on the rise. Inflation essentially means that the prices of goods and services are increasing over time, and this erodes the purchasing power of the money we have. As prices go up, consumers can buy less with the same amount of money. This trend not only impacts their daily expenses, but also their ability to save and invest in the future. Interest rates are another key factor. When interest rates are high, it becomes more expensive to borrow money. This can affect various aspects of consumers' lives, from mortgages to car loans and credit card debt. It means that not only do consumers have to pay more for the things they want to buy on credit, but it can also deter them from taking on more debt, which can limit their ability to make big purchases. Geopolitical tensions add a layer of uncertainty and stress to the financial landscape. When there are conflicts or uncertainties on a global stage, it can have ripple effects on economies and, in turn, on consumers. Trade disruptions, sanctions, or fears of conflict can all contribute to the environment of economic instability. Now, let's consider the perspective of Walmart, the world's largest retailer. Bill Simon, who served as the head of U.S. operations for Walmart for 4 years, is in a unique position to observe these trends. Walmart is the bellwether of the consumer sentiment because it caters to a vast and diverse customer base, making it particularly sensitive to shifts in consumer behavior. Simon's observations are indeed cause for concern. He noted that for the first time in a decade, Walmart has witnessed a significant slowdown in sales activity. This slowdown is a clear signal that consumers are reacting to the economic pressure created by inflation, interest rates, and geopolitical tensions. As consumers feel the pinch of rising prices and the potential uncertainty of the future, they naturally become more cautious about their spending habits. This tightening of budgets can have a ripple effect on the economy, as consumer spending is a significant driver of economic growth. It also highlights the need for individuals and families to be mindful of their finances and make informed decisions in these challenging times. The convergence of inflation, interest rates, and geopolitical tensions has indeed created a challenging environment for American consumers. Walmart's concerns about the slowdown in sales activity underscores the real impact of these issues on people's wallets and their ability to make purchases. These economic challenges serve as a reminder of the importance of financial prudence and preparedness for individuals and families in navigating these uncertain times. Several significant factors are converging to create a challenging environment for American consumers. Let's explore how these factors are putting pressures on people's finances and how their cumulative impact is affecting purchasing power. First and foremost, inflation is a significant issue. Inflation is essentially the gradual increase in the prices of goods and services over time. When inflation is high, it means that the same amount of money can buy fewer goods and services than it could in the past. This erodes the real value of people's earnings and savings, making it more expensive to maintain their standard of living. For many Americans, this translates into rising costs of everyday essentials like groceries, gas, and housing. As these prices increase, it becomes more difficult for consumers to stretch their budget, and this can lead to financial strain. High interest rates are another major concern. When interest rates are elevated, borrowing money becomes more expensive. Whether it's a mortgage, car loan, or credit card debt, higher interest rates mean consumers have to pay more in interest on their loans. All of these factors can contribute to a sense of economic insecurity among the public. Now, it's important to understand why these issues are so concerning. Consumer spending plays a massive role in driving economic growth. In the United States, it accounts for approximately 72% of the gross domestic product. When consumers reduce their spending due to the factors like inflation, high interest rates, and political tensions, it has a direct and negative impact on the overall economy. This can result in a slowdown in economic growth, which can have far-reaching consequences from job losses to reduced business revenues. In this context, the recent data showing a 3.7% increase in the Consumer Price Index in September is particularly concerning. While it's true that inflation has fallen from its peak, the fact remains that it's still a significant issue affecting many Americans. This increase in the CPI means that the cost of living is going up, and it's putting additional pressure on households. In conclusion, the confluence of inflation, high interest rates, and political tensions is indeed weighing heavily on American consumers. These challenges are collectively eroding purchasing power, reducing consumer spending, and contributing to a slowdown in economic growth. As these issues persist, it's crucial for individuals and policymakers to find ways to navigate these challenges and promote economic stability and prosperity for all. The return of student loan payments is adding an extra layer of financial burden for millions of borrowers. As these payments resume, consumers are tightening their belts to meet these obligations. This added financial strain is directly impacting their spending habits and causing them to cut back on non-essential expenses. Consequently, businesses that rely on consumer spending are feeling the effects, as reduced spending by borrowers can lead to lower sales and revenues, particularly in industries related to retail, entertainment, and dining. The upcoming U.S. election and the government's failure to pass a budget are introducing further uncertainty into the economic landscape. Consumers are affected by this uncertainty as it directly influences their confidence in business conditions, job availability, and earning prospects. When consumers lack confidence in these areas, they tend to be more cautious about their spending. They may postpone major purchases and adopt a wait-to-see approach, which can further contribute to a slowdown in economic activity. Economists' predictions about an intensifying consumer recession are a source of concern. A weakening consumer sentiment indicates that consumers are becoming more apprehensive about the future. In response, shoppers are exercising caution when it comes to their spending decision. This cautious approach can result in a reduction in consumer spending, which has a cascading effect on the broader economy. In addition to these economic challenges, consumers are facing marketing tricks from retailers. These include using percentage discounts that may not truly affect saving and engaging in shrinkflation, which means providing less product for the same price. These tactics can lead consumers to believe they're getting a better deal than they actually are, further eroding their purchasing power. Walmart customers have noticed discrepancies at self-checkout kiosks, where some items are being charged incorrectly. These issues contribute to the growing concerns about Walmart's price steadily increasing, which directly impacts the budget of customers and can affect their overall shopping experience. Spending levels are expected to continue declining, and a recent survey shows that a significant 92% of U.S. adults have cut back on spending over the last 6 months. This reduction in spending is a clear reflection of the financial pressures consumers are facing, which are caused by a combination of rising prices, debt obligations, and economic uncertainty. Furthermore, the grocery market is experiencing a contraction, as indicated by the fall in online grocery sales in August and September. Consumers are likely reducing their grocery spending due to the overall financial strain. As a result, this trend is affecting the revenue of businesses in the grocery sector. The convergence of various financial pressures, from student loan payments to rising prices and economic uncertainty, is directly affecting consumer behavior. Shoppers are becoming more cautious, leading to decreased spending levels. The marketing tricks used by retailers add to these challenges, as does the observation of discrepancies at the checkout. All of these factors contribute to the economic slowdown and the financial pressure experienced by households across income levels. The concerns raised by Walmart CEO are a reflection of the financial challenges many Americans are currently facing. Thanks for watching this video. If you found this video insightful, don't forget to hit the like button and subscribe to our channel. Also, feel free to share your thoughts in the comment section below.